Hi guys, today actually I would like to explain about the trades that I took on three different pairs. That first one is Cadjpy and another pair is Eurnzd and another pair was Gbpcad. So I took a trade in Cadjpy and I took two trades in Eurnzd and I took another trade in Gbpcad. So totally I took 4 trades today and I won 3 trades and I lost 1 trade. So first of all, let me explain the losing trade so that I can get it over with. Okay, the reason behind this trade was, I'll start it from the higher time frame. So as you can clearly see, this was in an uptrend and the move was pretty heavy. So after a bit of a pullback on 4-hour candle, I thought it's time for a small retracement towards the supply zone. So I entered a buy position on a 15-minute candle right here. So the reason behind the trade, how I played it in my mind was entirely different and how it played was entirely different. So this is what actually I mentioned in my earlier videos, guys. Trade what you see, do not trade what you feel or what it could have been. So it was a simple mistake that actually I committed, even though I say it pretty much in all my videos, but this time actually I didn't follow it, since this was kind of an impulse move, because as you guys can clearly see, the move is pretty consistent towards the upper side, and then when it broke down towards the lower side, there were no buy candles. All the candles were simply bearish. So I thought it would be it's time for a little pullback and then it can retrace back towards the normal zones. As you guys can clearly see, it happened like I thought, but what I didn't time was my stop loss. My stop loss, since my position is a little heavy, what I meant was I entered quite a bit of a bigger lot. To be fair, I entered a bigger lot. I think it would be for my small account. Actually, I think it would be fair enough to call it a bigger lot, even if it's 0.5 or 0.7. So since my account is pretty much around 500 or 550, the total account itself, so I would call 0.5 lot a bigger size. So bear with me, guys. So when I entered the trade, I thought it would actually go in my favor, but it actually went for a while, then it suddenly got stopped out, and actually it came back for a liquidity grab towards this area, then it flown straight away to my target zones. That's what happened, guys. It is what it is. So we cannot catch all the moves like we planned. Anyways, guys, even though it was a pretty uh, bang on move towards the upside. uh, Many of you guys could ask, why did I put my stop loss very tight? I could have put it maybe few pips away. I could have, but what if the move was very bearish? What if the move was heavily bearish? In that case, my loss would have been pretty heavy. Since my lot size was also very big, the amount which I lost was pretty considerably what I thought in my mind. If I extended my stop loss each and every time, it never works that way, guys. Whenever you enter a trade, before entering a trade, you should know how much you are willing to risk. Even more than how much you are willing to profit, you have to understand the risk. You have to calculate the risk, and you have to know it before entering the trade. And that's what happened, guys. So let me explain the second trade, which is in Eurnzd. As you guys can clearly see, it's a parallel channel. So the reason behind the trade was fairly simple. This type of move is what the traders would call a bear flag. You guys can see this is the pole and this is the consolidation patterns, and then a big move and it might fall down. I'm not saying it would, it might happen. This was actually the reason behind the trade. Actually, let me clear up the drawings, guys. Yeah, so after this trendline breakup, I was loading up pretty heavily on this trade. Actually, I started loading up from here. I started loading up a little smaller lot sizes from here, and when it went literally above these stones, I loaded up pretty heavy. My lot sizes were getting bigger and bigger and bigger, so that I can actually squeeze each and every amount of profits that I can gather from this trade. And that's what happened, guys. I thought it went against my setup for a while, because since you guys can see it was an uptrend, then it broke out the trend line, it came back. So this was actually what happened, but in real time scenario it didn't happen like that. All I saw while I'm loading up here was the bullish trend. Since it breaking away each and every trend, since it broke away this trend line, you guys can clearly see this breakout was pretty bullish, and I waited out and marked this green line, because I know this was a reversal zone, because each and every time when the price jumped up here to this entire area and this trend line, the price actually fell down. So I thought this was actually what happened. As you guys can clearly see, the price pulled back heavily, and actually I secured a good amount of profit in this trade. Even though it might look like not that much, I caught 27 pips, but my trade sizes were pretty heavy, so that I could get each and everything. Actually, guys, had a runner around this area, which I thought it would go far below, so I can get a quite a bit of pips, like it nearly 45 pips. Actually, I waited out for this to play out, but unfortunately it didn't happen. Since then I was waiting around for this to play out, but it didn't happen. So I closed it out and I closed the entire short position. Then after I after it was consolidating a while, I entered a long because this was a falling wedge. So each and every time when this falling wedge happens, it's normally a bullish scenario. As you guys can clearly see, this is what happened. So this is why I would like to stress it out, guys. You guys should understand each and every pattern which is happening even on the smaller time frame. As you guys can clearly see, each and every pattern that develops on the smaller time frames leads to the bigger time frame. We can do top to down analysis, down to top analysis. It doesn't matter. Even when you guys can see top down analysis, it would probably show the bigger picture, but what happens in the smaller time frame determines the bigger picture. As you guys can see, I took all these trades based upon smaller time frame, even though I actually used the higher time frames to understand the entire momentum. But to get into a trade, but to place a trade, or to get it to the particular point, I would say it's pretty much I enter in the smaller time frames. Most of the times my entry would be in smaller time frames like 5 to 15. That would be the preferable time frame for me to enter into a trade. So as you guys can see, this is in a 5 minute time frame. When you can, as you guys can see, even clearly in a 1 minute time frame, it's very clear this was a falling wedge. It broke out and gave it what I needed. So I loaded up this trade with a very bigger lot. So once I was able to get what I needed, I got out very quickly. I could have let it run. Seriously, I thought I could have let it run, but thereafter, since I had most of my trades in a winning trade, so I thought, okay, why not? So that's why I closed the trade with 20 pips, even though I could have secured even far more, maybe around 50 pips. Now I think about it, I should have let a smaller lot run. But anyways, guys, it is what it is. So okay guys, let me explain the next trade. This was actually a beautiful trade, and this was actually a news event. This was the first trade of the day, I think, guys. Yeah, it was the first trade. It was the morning trade. So actually I didn't trade the news, guys. Yeah, it was on a news event, but after this bullish move towards the upper side, actually guys, I was waiting to enter this trade. I drew these zones far before the news event. I was thinking to enter here. I was waiting for the confirmation because I wanted to clear up this wick so that I can enter freely towards this area. Yeah, that's what I thought, and that's what happened. But the problem is I didn't enter this trade. I didn't catch the long position. So I missed out on this trade, and I waited for few minutes. You could call it 1 or 2 minutes. So after this bullish move, I thought the price started to consolidate. So I thought the price needs to retrace back to the origin. So then I put a short here. I placed a stop loss just above this share entry, so that I didn't want to lose my money if it goes the opposite way. So my stop loss was very tight, and my short position was pretty much melted down like lava. That's what I would call, because it was a pretty easy trade, guys, but it was a risky trade. As you guys can clearly see, trading the news would be really a good thing, but also a bad thing if you don't know the fundamentals, or if you don't know how to trade the news. It's a double-edged sword, guys, because the whole capital could be wiped out pretty much in seconds or minutes. So you guys can, I could have let it run on a smaller time frame. I could have let it, and even I could have caught the entire pip, like from the top to down. It's like 150 pips. I caught around 60 or 65. That's more than sufficient for me, since after this was the position that I thought, and I got out. As guys, why I'm talking about the trade entry and exits, because when you enter the trade, you should know when to exit. That should be your strategy. The market will always move. It won't stop for you guys, whether you like it or not. I could have got this entire move to the downside, but practically it's impossible to get into each and every move, because it's not possible, guys. It's purely psychological and purely emotional. So guys, whenever you trade, you should take out your emotions, and you should just trade with pure technicals and fundamentals. Even though it cannot be done on a 100% level, at least you guys can start trading like that. Start practicing with smaller lots. Start practicing with demo accounts, so that you don't actually wipe out the original account. So as you guys can see, the price came down and it went back in a flash. I just saw this. You guys could clearly see this wick would be alone nearly 70 pips. So I could have went, I saw this move and I didn't enter it. I didn't enter it because many of you guys can clearly see, you could have hold on to this. If you could have hold on to this trade till here, you could have lost in a second. 70 pips to the upside would have cost everything. So guys, with smaller accounts, please do not trade like this. Since it was a demand area, price came down very quick and caught the liquidity. This week called a liquidity grab. This week was the liquidity for this entire move to the upside. As you guys can clearly see in the 5-minute time frame, there are no candles, guys, only a wick, and then to the upside. Yes guys, after this, pretty much the price started to consolidate. This is what happens after a news event, guys. So thank you guys for watching all my videos patiently. Thank you guys for bearing with me, even though I might stumble a little bit. Kindly pardon me, guys, bear with me. These are my new videos, so I'm actually pretty much new for YouTube, like to be a YouTuber, to start a channel of my own, and just to experience how it actually goes. That's what I've been trying to do, guys. So guys, bear with me. For each and every video I'm trying out new things, so trade wisely, guys, and do not lose your capital. That is the most important thing. Risk per trade should be based upon your capital. For each and every trade, the minimum risk should be 2%, even if it's a smaller account. If it's a very big or a larger amount, the maximum would be 5%. It's depend upon each and everyone's risk appetite, guys, but no one should lose your hard-earned money. Just because you know how to trade, it doesn't mean that you can't lose money as well, guys. In trading, it's a double-edged sword, guys. So trade wisely and stay disciplined, guys. We'll catch another video, guys. Thank you for watching all the videos.